Hey everyone, happy weekend. Mr. Stockwell here. It's December 21st, 2024. Super excited to do some analysis on the S&P 500 today. And I have a real big feeling that this is the top guys for the S&P 500. And I'll go over some analysis here, but just wanted to, keep you guys aware, right? So the first thing I want to take a look at is sort of this last impulse of structure that we've seen. And what's very interesting is that if I take the height of that specific wave since 2020 all the way up to 2021, and I basically copy the same height, guys. All right, we're exactly at the same height previously, right, for this impulsive wave. It's very interesting. What we typically call that, guys, in trading is a 1-to-1 ratio, right? You can take a look. It's literally a 1-to-1 ratio. And in trading, guys, the 1-to-1 is sort of the golden goose that you need to know, because at the 1-to-1, it always, guys, 99% of the time, it will always not break through on the first try. The price cannot break through the 1-to-1 on the first try because of the fact that the banks are putting in algorithms. They probably bought here, right? And then they coded in to extend out to the 1-to-1 to start taking profits here, guys, right? This is how the banks do it. They put the algorithms in, and typically at the 1-to-1, that's exactly what's going on. It tried to break through and price couldn't, right? So very interesting. Second thing I want to take a look at, right? If we dive deeper a little bit here on just this impulsive wave, we have a wave 1, 2, 3, 4, 5. Okay, 5 waves in. That means that typically this is going to be a local top that we're seeing. And another thing I want to take a look at is the RSI. You can also see that it's bearishly diverging, guys. We're losing momentum on the RSI while price is going up, right? That means there's buying loss of momentum. And if you take a look at the MACD, we're also in sort of that negative range, okay? We're losing momentum across the board despite going higher, okay? That's a pretty bearish sign to me, right? Now, I'm going to dive deeper into the daily time frame here, and just specifically this last wave, right? This fifth wave, and you can see that we do have sort of a massive trend line that's been forming, right, across the board. It looks like a channel or some type of wedge that's been forming since beginning of August, right? You can see that. And these are typically pretty bearish, guys. You have a rising channel or rising wedge within the fifth wave. That is a bearish sign. And once we start breaking this channel towards the downside, this is going to possibly impulse down, all right, pretty massively. Okay, so what does that mean? Well, that means that as a day trader, for me, I'm definitely going to take this opportunity to find ways to short the S&P 500. Okay, and essentially what I see is that if this is literally the top, okay, if this is literally the top, right, I'm going to find ways to short it. So I'm going to take the fib retracement, and it looks like we stopped here, right? So what typically happens is we're going to go down, push back up, right, to reset, and then we're going to push down. This is the play. And that is typically what we call an A, B, C correction towards the downside, right? So what is a day trader's dream? Well, it's basically to short at these levels at the 600 range, right? Put a stop loss above that at 603. So 604.45 is where I put the stop loss. And I'm going to be targeting 574, 570. That's a beautiful trade. And guess what, guys? Why am I targeting that area, right? Why am I targeting that area? Well, this is the 1-to-1 towards the downside. Look at this. We're taking the 1-to-1. Boom. That's it. So guys, as traders, we always play 1-to-1s, right? We always play the 1-to-1s. We're doing exactly what the banks are doing. We're going to do exactly what the banks are doing. We're going to short the 618 Fibonacci retracement level, right? We're shorting the 618 golden level, right? And we're shorting it down to the 1-to-1. That's how the banks do it every single time. Okay. Now, as a trader, guys, what you have to think of yourself is a lawyer, right? You need to build a case essentially of all this evidence, right, to be able to prosecute or to be able to have a bias towards what you're trying to do, right? So we have not only the one-to-one on the weekly time frame, we have 5 waves, right? We also have the rising wedge. We have bearish divergence on the RSI and losing momentum on the MACD on a weekly time frame. These are all things that point for me that this signal is bearish. Okay. Now, does this mean that the S&P will will become like 2008 or 2020 where we just skyrocket down? No, I don't think so. I still think that the bull run is still on. It's just that something like this, guys, maybe a healthy correction, right? Something like this could happen over the next year or so, right? That's sort of what I'm thinking. A healthy correction for a long-term investor to basically, get in at cheaper rates, right? It might come down to here, right? These are all different tops that the S&P can essentially go down to on a larger time frame. That makes sense to accumulate for your long-term portfolio. But as a day trader myself, guys, I do this for a living. I find opportunities every day, and the S&P is showing me a good one coming up. So I'll keep you guys posted. So follow me on Twitter at Mr. Stockwhale. You'll see all my updates and trades and picks there. And looking forward to seeing you guys around. Talk to you guys soon.